Let's take a look at your market news now. Asian markets mostly dropped on Tuesday as the previous day's euphoria over the China-US trade ceasefire gave way to questions about whether the two can ultimately resolve their differences. However, oil prices continued to rise, building on Monday's surge, fueled by the agreement as well as news of a Russia-Saudi Arabia pact to cap output. Now, what started as a negative day across the board has now turned into a better but mixed picture. Tokyo's Nikkei did a slip, a massive 2.3% to end the day at 22,052 points rather. The Hang Seng Index turned positive to end the day at 27,184 points, and the Shanghai Composite gained 0.5% to hit 2,665. Wall Street's major indices rallied on Monday, this following a truce between the United States and China in their trade war, which has clouded the outlook for the stock market for much of the year. The Dow Jones Industrial Average rose 1.1% to end the day at 25,826 points. The S&P 500 moved almost 1% to the good, closing out at 2,786, while the Nasdaq Composite was bolstered by a good day for the tech counters, rising 1.3% to 7,429 points. For more on the markets, we cross to Arabile Gomede at the JSE. Arabile, also looking like a mixed bag where you are.
Yeah, certainly is. It's pretty much flat across the JSE this morning, this afternoon rather, should I say, Nzinga. Things have really come to the fore, of course, after that GDP number. You saw the market, particularly the Rand, move in a more favorable position around 13 Rand 55 odd against the US dollar. That is a positive sentiment. How long it will last is perhaps the question at play here. Of course, GDP having risen a little bit more than expected at 2.2% for the third quarter, that's between July and September, does take South Africa officially out of that recession. But the question is, how much further can we go along? Can we perhaps hit that 1 percentage point mark for the year and even higher? But it will depend a lot on just how things continue to go. The likes of mining, of course, having fallen 8.8% in that quarter. You certainly want to see that pick up a whole lot more. And whether that does, that will certainly send a clear message that South Africa is perhaps turning things around. The likes of construction as well, not doing too well. That sector as a whole has been in the doldrums and has suffered for quite some time, seeing those construction companies themselves not do well as well, just on the board behind me. But it was a really good day across most sectors in the JSE yesterday, rising just around 3% or so, and across the globe as well. The likes of Europe doing well yesterday, that is. Today, however, pretty much a mixed bag, as you saw out in Asia as well. Let's unpack the rest of the European and local markets. Well, as you can tell there, the market pretty much flat today, and as you saw out in Europe as well, pretty much a mixed picture. So let's chat to Devin Shute now from the Robert Group as we unpack just how markets are flowing. Devin, thank you so much for the time. You know, a bit of negative there, but a slightly flat picture today, shall we say, on the JSE. People not necessarily sure where to go following yesterday's rally.
Yeah, I mean, yesterday was massive in its scale. I don't think we've seen many rallies like that in the last couple of years in a single day. We've calmed down, moderated a bit today. That's to be expected. I think quite a standout feature on our market is that Rand strength you spoke about. So the GDP numbers definitely helping that with some short-term sentiment. But you've got a few other drivers there. You've got a much more dovish tone from the Fed coming through recently, which maybe the market wasn't fully expecting. And you've also got our Reserve Bank hiking rates last week, which definitely made us more competitive in that regard. So, you know, we'll take the rally yesterday. Today, I think we may be just catching our breath a bit, but overall, better than we've seen it for a while.
Yeah. Do we hope for a December rally?
Look, I think all the kind of conditions are in play for one. I would argue we probably do one. I mean, it would be nice. You know, market's still heavily in the red for the year.
Yeah, over 14%.
Yeah, you might see the market climbing this wall of worry as we start to realize that there is significant value in some of our counters on the JSE.
Yeah, if you were to take any company-specific data that perhaps has stood out for you of late, what would that be, maybe?
So look, I mean, I think if you look at the GDP number that printed today, manufacturing was the standout sector there. I think that's massively encouraging. If you look at the industrial sector on the JSE, you're getting some mid and even large cap companies trading at multi-year lows, valuations looking incredible cheap. And these are companies that are still positive in cash flow, but the sentiment has just been so heavily negative against us as we've launched the boil of state capture and really struggled with economic growth, that I see a significant opportunity in that sector.
Let's not forget that the EM space was kind of hard to come by this year as well, right? The likes of Indonesia struggling, Brazil, Turkey, of course. You know, you can't really forget that one. So we've sort of come through the mire and things aren't as bad as some would think. Yes, we saw the downfall, but this is nothing that we saw in 2008, 2009, right? You cannot compare the two.
No. I mean, I think what's different this time is that if you look at the JSE over a protracted period, 4 or 5 years, is that we've had very little real returns for investors, which is problematic. But we haven't had that short, sharp sell-off that you were mentioning in 2008, 2009. The emerging market crisis hurt us badly. It came at a terrible time for us. And as a result, the rand sold off strongly as that emerging market proxy. So, yeah, we've been through a lot this year.
That rand number, 13.58 now against the US dollar. Some stage this was 14 bearing on 15.
That's right.
And of course today's GDP number certainly does help that picture, the sustainability of the rand below 14 rand and perhaps moving closer to 13. How likely is that, you reckon?
Look, it's difficult to forecast the currency. What I will say is with this moderating kind of trajectory of Fed hikes that's starting to come through, I think that becomes more and more likely that we'll see continued rand strength.
I mean, we stay stronger for a little longer.
I would think so. You know, bar any unpredictable shocks that we always seem to attract at some stage. But, you know, if you look at what our government bonds are yielding in real terms, it's massively attractive. And I think the underlying fundamentals of South Africa, although maybe slower than some people would like, are definitely moving in the right direction. We saw it in the print today. And my sense is that will continue into next year.
We saw the likes of agriculture go up quite significantly with regards to that GDP number, but only offers 0.1 percentage point in terms of the overall growth figure. Have we perhaps looked at things like agriculture and just assumed that they were just so significant and so important that we forgot about everything else maybe?
I think it's possible. I think, you know, those primary industries and mining I'd probably put in the same basket have always been these glorified industries, and they serve a very important purpose. But as the economy has grown and has become more sophisticated, the employment and the growth has really come out of the secondary and the tertiary industries, which are the services and that type of thing. So while crucial, they definitely play a smaller proportional role in the economy.
Let's move on over now to the United States and even China, really, to across the country, really. That trade truce, how much impact does that have locally, even if it's just for 90 days?
Look, I think it's big. You know, that has created such a environment of uncertainty for a while now, since this has been going on, that I think just the calmness and the certainty, as you say, even for a short period of time, has really been well received by the market. My concern is that through these talks, you've seen how far apart the US and China actually are and what they want to achieve out of this. And my sense is that 90 days is not a long time to find a fair middle ground. So, you know, they're talking and saying the right things, but we're not seeing too much translate into action just yet. This is just a stay of execution that we still need to see more concrete reforms.
Would one say there was a little bit of sanity with regards to what Donald Trump has done here? Because he is beginning to somewhat get his way.
Yeah, I think so. It's probably a negotiating tactic. You know, he comes in hard, you know, with these quite radical demands and then moderates as we go. And I think we're seeing, you know, classic Donald Trump in play here. I think the Chinese are in a more difficult position. You know, they're going into these talks wanting no trade tariffs. I don't think they're going to achieve that. And so they're going to have to try manage it politically as well as economically, which is becoming increasingly more complicated.
Let's quickly talk about that oil story. Saudi Arabia having that pact with Russia. The United States goes one way. Qatar leaves OPEC. OPEC set to meet as well tomorrow. Is it the end of OPEC? Are we seeing a power struggle there?
Yeah, definitely a power struggle. I mean, I think Qatar leaving OPEC, is responsible for about 2% of production of the cartel, is more symbolic than anything. But I think we're seeing a diminishing influence of OPEC. And I think as we see more shale producers come online, as we see Saudi Arabia, which is the biggest partner in OPEC, and Russia is not in it, do side deals and production cuts there, I think it just diminishes that influence even further. I think we're probably, you could argue, in the beginning of the end of OPEC at some stage.
Yeah. So how long does it last? That'll certainly be the question at play here. Mediclinic going down 3.5% there. Tiger Brands up, however, on the day, 2.4%. British American Tobacco is doing fairly well despite the regulatory issues that they continue to face when it comes to things like e-cigarettes as well across the globe, even that menthol situation. So Devon Shute from the Robert Group having joined us today, unpacking a whole host of information that continues to trickle through. Of course, nothing more important than that GDP number to have come out for the third quarter. 2.2%, a revised fall of 0.4% in the second quarter. So out of a recession we are. And that's where the buck stops this afternoon. Nzinga joining you right after this. Do stay tuned.